Hello, welcome to European Open Briefing for Friday, December the 14th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So we've got a bit of risk-off sentiment this morning. We can see Asian and European indices sharply in the red. On Wall Street, it was a mixed session overnight. So the main story weighing on the market this morning is the weaker than expected data out of China, which has raised fears that the economy there is heading for a sharper slowdown than anticipated. The dollar index is firmer this morning as we're seeing other pairs fall sharply. Against the yen, though, the dollar is slightly weaker as the yen is also a safe haven currency. Moving on to euro, both the euro and sterling down significantly against the greenback. In Europe, we had dovish remarks by the ECB chief yesterday following the ECB meeting, and for sterling, it's looking likely that Theresa May isn't going to get the assurances that she wanted from the EU regarding the Irish backstop. All of this is weighing on the Australian dollar. It's down by almost 1% at 0.7159 at the moment. Kiwi also down sharply, down by more than 1% at 0.6778 dollars. For the Kiwi, additionally, apart from the risk off, we had news that the Reserve Bank of New Zealand plans to raise banks' capital requirements there to almost double the current levels, so that could potentially tighten financial conditions. So that's also upset the Kiwi this morning. And in commodities, oil, although it is down by more than 0.5% this morning, oil does seem to have found some renewed support. It rallied sharply yesterday on the International Energy Agency's latest report, saying that the oil market could return to deficit as early as the second quarter of next year. Taking now a closer look at the major pairs, we can see dollar yen holding comfortably above the 113 level as we see market's attention turn to the Fed's policy meeting next week. So all eyes will be on the updated dot plot chart, so that could will almost definitely set the dollar's direction. But in the meantime, we do have that risk off from that weak Chinese data. There's also the risk of government shutdown in the US by December 21st, as Trump is demanding funding for his wall from Congress, which is now being led by Democrats. So that's potentially something to watch out for. But if you have a look at the Australian dollar, it's fallen sharply this morning on that Chinese data. We saw retail sales growth in November hitting a 15-year low, industrial output rising at the slowest in almost 3 years. Although on the upside, this could possibly lead to further stimulus measures being announced by Chinese authorities in the coming days. And finally, having a look at the euro and the pound. So yesterday at the press conference after the ECB meeting, Mario Draghi said that the balance of risk is moving to the downside. That led to sharp losses for the euro, though it has stabilized now around 1.1350. The ECB also lowered the growth and inflation forecasts, so nothing too much new there, but potentially we could see a slower pace of policy normalization in the eurozone. And with regards to Italy, there's still, despite some positive headlines recently, there's still no decision there yet. The two sides still in negotiations, as is being reported. And for sterling, we've got the EU summits which started yesterday. EU leaders haven't given May the assurances, or strong enough assurances, that she was seeking, that the backstop would be temporary and is unlikely to be triggered. So this means that she still faces a difficult task of winning the backing of her MPs in order to get that Brexit deal through Parliament. That's it from me. Thank you very much for watching, and have a great day.